Hello, this is Dean Malone with ComposFX. Hope you're doing well today and you get some good trades. Recently, I've had a number of new members to my live active trade room, and they're new to the Synergy trading model. And they've asked me if I would take some time and go over the entry and exit rules with the Synergy trading method. Now, if you haven't already taken a look at the Synergy trading method, you can go to www.composfx.com/synergy, and it's a free download. Literally over the last 7 years since I first introduced the Synergy trading method, we've had thousands of traders around the world download it and make it part of their normal daily trading. And it's interesting to me that I get a number of emails from folks who say, Dean, the simplicity of the Synergy trading method has really changed my trading around. It's really helped me to focus on the key aspects of the market. Well, what are those key aspects? They are price action and market sentiment. Price action is noted above by the average price bars, the blue and red bars, and the price action channel, these two yellow lines, which represent the near term or the immediate trend in the marketplace. And down below is an indicator that I developed a number of years ago called the Trader's Dynamic Index. And what we're simply looking for is this. When price action is moving up and the Trader's Dynamic Index is moving up, we're looking to trade long. When we have price action going down and we have the Trader's Dynamic Index going down, we're looking to trade short. So we're looking for an alignment of price action and market sentiment. The interesting thing is we know that price action and market sentiment don't always align. And more times than not, when price action goes one direction and market sentiment goes in the other direction, more times than not, price action will eventually turn and go in the direction of market sentiment. We just have to be prepared for it. So let's take a look at the entry and exit conditions when it comes to the Synergy trading method. Here's an example of a potential entry of the euro a few days ago. We can see that we have a blue bar rising outside the price action channel, and at the same time, looking at the Trader's Dynamic Index, we have the green over the red, just coming over the yellow, and they're over the 50 level of the Trader's Dynamic Index. An exit is where we're looking for the market to make a change. We're looking for a change in either the price action. We can see we've gone from a blue candles or blue average price bars to a red average price bar. And at the same time, our market sentiment has changed. Green, instead of being over the red, is now crossed over the red and starting to decline. So let's take a closer look at the entry rules. For a long entry, what we're looking for is the blue bar to be rising outside the price action channel. We're looking for the price action channel to be trending up. And we're looking for the Trader's Dynamic Index to have the green line greater than the 50, greater than the red line, and greater than the yellow line. For a short entry, we're looking for a red average price bar and for it to be dropping below the price action channel low. And we're looking for the price action channel to be really trending down if at all possible. Now if it's flat, that's okay. We eventually want to see that price action channel, the two yellow lines, start to turn and go down. And then we want to see the Trader's Dynamic Index, the green line to be below 50, below the red line, and below the yellow line. So again, here's the potential entry, and let's put it all together. We have a blue average price bar and it's rising above the high of the price action channel. We start to see that the price action channel is starting to trend upward. It was flat and starting to trend up a bit. And down below we see green over red over yellow and crossing above the 50. This is all a good indication of a long trade. Now let's take a moment and look at the exit rules. For a long exit, first off we take a look at the average price bars. We're looking for a blue bar that turns to a red bar and closes as a red bar. We can also look for a blue bar to close inside the price action channel. This is a sign that the market's getting congested and getting consolidated. Another way to look at it is we can look at the Trader's Dynamic Index. Does the green line cross the red to the downside? Is green greater than 68 on those smaller time frames, especially when you're down the 1 minute or the 5 minute time frames? Look for an immediate turn back down if the green line is well above the 68. And also, is the green line, if it's gone beyond the 68 on the higher time frames, is it turned over and dropping below the blue volatility band? if we take a look, we can see all this has occurred. The blue bars have changed to red. We've closed inside the price action channel, and we have green crossing below the red, and we have green crossing below the blue. For the short exit rules, it's just the opposite. We're looking for the red bars to turn to blue. We're looking for the red bars to potentially close inside the price action channel. And what we're looking for in the Traders Dynamic Index is the green to cross over the red, or if we're on a small time frame like a 1 minute or 5 minute, we're looking for the green. If it goes well below the 32, be prepared for a potential exit as it may turn sharply back up. And also if the green line crosses above the lower volatility band, the lower blue line going back towards the 50, that's another good potential exit. Well, folks, those are the entry and exit rules for the Synergy trading method. I recommend you review this video, write those little rules down, and follow the market as the Synergy trading model shows you the alignment or the divergence of price action versus market sentiment. Well, folks, this is Dean Malone with CompasseFX. Hope you have a good day. Make some good trades. We'll talk to you next time. Bye-bye.